In 2019, a man named Marcus lost the refinancing deal he had spent 2 years building. Not because of a bad investment, not because someone scammed him, not because he made some huge, obvious financial mistake. It was because of a $10 charge. $10. The cost of a fast food combo meal. The price of a phone case on Amazon. $10 a month, that he saw on his statement every single month and did nothing about. And by the time he finally paid attention to it, the damage was already done. His credit score had dropped 90 points. His mortgage lender had flagged him, and the deal that was supposed to save him $400 every single month, gone. Just like that. This is the story of how a $10 subscription nobody thinks twice about quietly unraveled years of financial progress. And before this video is over, I want you to check something in your own bank account, because what happened to Marcus might already be happening to you right now. Let's go back to the beginning. Marcus was 34 years old when this happened. He had a stable job, nothing glamorous, project coordinator at a mid-size logistics company. He made decent money. Not rich, not struggling, just normal. And that's actually the most important part of this story. Because Marcus wasn't reckless. He wasn't the kind of guy who blew his paycheck on things he didn't need. He had a savings account. He paid his bills on time. He had a mortgage. Which, if you know anything about getting approved for a mortgage, means someone already looked at his finances and said, yeah, this guy is responsible. He was doing the right things. But Marcus had one habit. Just one. That seemed so harmless he never even thought of it as a habit. He trusted AutoPay for everything, and he never looked at his bank statements. Not because he was hiding from them. Not because he was scared of what he'd find. He just didn't. The bills got paid automatically. Nothing ever bounced. So in his mind, everything was fine. And for years, it was, until it wasn't.
Here's where the story changes. And I want you to stay with me here, because this is the part that most people don't know. And it's the part that can actually protect you. When you have a recurring charge attached to a bank account, your bank sees that account as active and predictable. That's fine. That's normal. But banks also have internal systems, algorithms basically, that monitor your account behavior and quietly adjust things like overdraft thresholds, credit flags, and account settings based on patterns they observe. Most people have no idea this happens. It happens in the background. No email, no notification, just a quiet adjustment you'll never see unless you go looking for it. Because of the recurring $10 charge, Marcus's bank had categorized his account as a low-activity fixed expense account. And at some point, without Marcus ever being told, his overdraft buffer was quietly reduced. He went from having a $500 overdraft cushion to having almost none. He had no idea. So here's what happened next. A few months later, Marcus has a big bill due, a legitimate one, his annual home insurance payment, which was also set on AutoPay. About $800. He'd paid it fine the year before, but this year, because of the adjusted overdraft settings he didn't know about, and because his balance happened to be lower than usual that week, the payment bounced. One missed payment. First time in years. He fixed it within days, called the insurance company, made the payment manually, thought it was over. It wasn't over, because that bounced payment, even though it was resolved quickly, got reported, and the report went to his mortgage lender. One missed payment on a mortgage-linked account, 90-point drop in his credit score. 90 points. If you've ever tried to understand credit scores, you know that a 90-point drop doesn't just feel bad. It moves you from one category to another entirely. Marcus went from being considered a low-risk borrower to a moderate-risk borrower overnight. And in the world of lending, that distinction is everything. Now, for about 2 years at this point, Marcus had been working toward refinancing his mortgage. Interest rates had dropped since he first bought his home. His financial advisor had told him that if he refinanced at the right time, He could lower his monthly payment by around $400. $400 a month. That's nearly $5,000 a year back in his pocket. He had done everything right. He'd kept his credit score up. He'd made every payment on time. He was ready. And then, right in the middle of the application process, the lender pulled his credit report and saw the missed payment and denied him. Just like that. 2 years of preparation gone. And Marcus? I want you to really hear this. Marcus still had no idea any of this had happened. He was still being charged $10 a month for that subscription, still hadn't canceled it, still meaning to. The day Marcus found out is the kind of moment that sticks with you when you hear it. He got the denial letter from the lender, and his first reaction wasn't panic. It was confusion, because in his mind, he had done everything right. He didn't understand what could have gone wrong, so he pulled his credit report. And there it was. A missed payment. Flagged. Reported. Sitting on his record like a stain. He called his bank. Spent about 45 minutes on the phone going through his account history. And that's when the representative explained to him about the overdraft adjustment. Explained how the bounced payment happened. Explained the chain of events. And Marcus, almost as an afterthought, almost because he was just trying to understand every single piece of it, asked what triggered the overdraft adjustment in the first place. The representative walked him through the account monitoring system, the recurring charges, the patterns, the flags. And at the end of that explanation, Marcus was staring at a $10 subscription charge on his screen that he hadn't thought about in over a year. He told his friend, and this is how I heard this story. He said he sat in his car for 45 minutes after he hung up that phone call. Just sat there. Not crying, not angry, just still. Processing how something that small could travel that far. Now, I know what some of you are thinking right now. You're thinking, come on, that's a stretch. Banks don't work like that. One subscription can't do all of that. And here's my honest answer. You're right that it's not always this direct. Every bank is different. Every account is different. But the chain of events Marcus experienced, each link in that chain is completely real. Overdraft adjustments happen silently. Bounced payments get reported. Credit scores drop faster than they rise. And refinancing deals fall through for exactly these kinds of reasons every single day. The $10 charge didn't destroy Marcus's finances, but it was the first domino. And he never saw it fall.
18. Marcus signed up for a free trial. One of those streaming or productivity apps, the kind you see advertised constantly, the kind that promises to change your life for 14 days at no cost. He used it twice, maybe 3 times, and then he forgot about it completely. What he didn't forget, or rather, what he didn't notice, was that after the 14 days ended, the app quietly converted his trial into a paid subscription, $10 a month. It showed up on his statement that first month, and he actually saw it. He looked right at it. And his exact thought, in his own words, was, and I love this because we have all said some version of this, his exact thought was, I'll cancel that later. Later. That word does more damage to people's finances than almost anything else, because later never came. Month 2, he didn't even notice it. Month 3, same thing. By month 6, it had become part of the background noise of his bank statement. One of those charges your eyes just skip right over because it's always been there. 14 months passed. By the time anyone paid attention to that $10 charge, Marcus had paid $140 for an app he hadn't opened in over a year. Now, $140 is annoying, but it's not catastrophic. You could cut it and move on. The problem was that the $10 charge wasn't the real issue. The $10 charge was just the door, and behind that door was everything else.
I'm not going to lecture you. That's not what this is about. But I do want to give you the 3 things Marcus said he wished he had known, because they're practical, they're simple, and honestly, one of them you could do before this video ends. Number 1. Small recurring charges are not isolated. They are connected. Your bank account is not just a number on a screen. It's a living record that your bank is constantly reading, interpreting, and reacting to. Every charge, no matter how small, is data, and banks use that data to make quiet decisions about your account that you may never be told about directly. Number 2. AutoPay is a convenience. It is not a system. AutoPay handles the transaction. It does not handle the consequences that can flow from that transaction. It doesn't check your balance before it runs. It doesn't warn you when your buffer has changed. It doesn't know that this month is tighter than last month. AutoPay is a tool. And like any tool, if you hand it something and walk away, sometimes things go sideways while you're not looking. Number 3. A 10-minute monthly audit is the cheapest financial protection you can buy. Marcus now sits down on the first of every month. 10 minutes, that's it. He goes through every single charge on his account. Not to obsess, not to panic, just to know. He calls it the cheapest insurance he's ever had. And here's what I want you to do right now. Seriously, pause this video if you need to. Open your bank app, scroll through last month's transactions, and ask yourself, how many of these charges did I consciously choose this month? Not last year when I signed up, not 2 years ago on a free trial. This month, consciously. If there's anything on that list you can't immediately explain, that's your $10 charge. Find it before it finds you. So where is Marcus now? He spent 18 months rebuilding his credit score, made every payment, kept his balances clean, disputed what he could dispute. And eventually, he got back to where he was before. He reapplied for the refinance, got approved, and yes, he got the lower rate. The $400 a month he'd been chasing for years. He did get there, but it took 18 months longer than it should have, and it cost him thousands of dollars in higher mortgage payments during that time, which he will never get back. The $10 subscription? He canceled it the same afternoon he figured out what happened. He hadn't opened the app in 14 months. Here's the line I want to leave you with. And I mean this genuinely, not as some motivational quote, but as the actual takeaway from Marcus's story. He didn't lose everything, but he came close. And the thing that almost took it all down was something he saw every single month and decided wasn't worth his attention. Nothing is too small to deserve your attention. Not when it comes to your money. Because the small things don't stay small. They just wait. Drop a comment below. What's the smallest financial thing that ended up costing you way more than it should have? I read every single one. And if this story hit different for you, share it with someone who needs to hear it. See you in the next one.